Or y'all gonna forgive me though? I really just hold up before you get mad. I'm transitioning, okay, to my job, okay. So don't even get mad. But I'm so happy to be back. I did want to talk about one thing. Let's get it. So hopefully you can see we have the markets, we have our stock market, we have our currency market. And lately, I've been really more interested with the currency markets showing me how our stock market or our global markets are doing. I've posted it before in some videos, but the Aussie dollar. So here we have my tweet. I actually did this 3:44 a.m. Do not like to say I told you so. I'm no fortune teller or anything. But it shows the global markets currently turned risk off with a rejection at short-term exponential moving averages in a break of yesterday's low. And now you have the US versus the Swiss franc doing well, meaning that there's a risk off action. So like Aussie dollar is the risk on, the Swiss franc is the risk off. So if you feeling like you want to be safe with your money, you're gonna go switch over to the dollar. If you're not feeling like that, you want to have a little bit of risk in the market, you're gonna go to the Aussie dollar. So we can look at this chart. Aussie dollar peaked at 80 cents. Big flushes. And then we got that nasty rejection at 78.5. And then we actually had broke that yesterday's low already at 3:44 a.m. And that just was like, this was before market open, barely in the pre-market, but it kind of just showed like, whoa, this is not good, guys. And then over here, you have your risk on trade or currency that is actually a safer bet. And you're like, hey, I don't want to be risky anymore. I'm going to actually go on the dollar, raise those cash. So the Forex markets have trillions of dollars going through it, way more volume than the actual stocks. So you can see if you want to follow the money, you need to look at these currencies. So let's look just real quick. We have the Russell. We kind of had this megaphone pattern. And then we did have a rounding top. And when I tell you I hate rounding tops, I mean, I hate them. It was just a really bad rounding top. -3% on this day, 18th of March. Then we actually had a good day on Friday, popped up, gapped up, and then flushed. Not really flushed, but sold off. And then today we gapped down and we broke below the 50 SMA. Not good, guys, not good. So some levels of support. You see a bunch of wick action right here at 209. So you can kind of determine that, hey, this could be a good area as far as a support level if we go down that far. On the week, let's look at the week. Let's not just look at the days. On the week, we broke the 10 EMA on the week. Not good signs there, bud. Not good signs there. Unless we get that wick right here again, that'll make it better. It's only Tuesday, but not looking good on the weekly. Monthly looks fine. Let's go to the Aussie dollar. The Aussie dollar, guys, right here we had that rejection, and I was talking about at the tweet, it was saying it was around 76.8. We actually flushed all the way down to the 100 SMA, also 76 cents. So let's see how it goes. That rejection, like I said, was bad, and then getting a negative 1.58% on a Forex is a big freaking deal, guys. A big deal. So markets he just ain't been friendly. Like since around February 16th or so, it just really hasn't been friendly. Not good. It's just really a day trade. No swings, man. No swings. Finally, Bitcoin broke below its short-term EMAs. I do have faith in Bitcoin. We do have the 50 SMA as a support level. We also have this $52,000 mark previously that was marked, and it will most likely have some sort of buy action right in here. The candle right here was pretty bad, but kind of held its own on yesterday's close, or really today's close. And then finally, with the new days open for the Asian markets, we are actually going down. However, we are still, to me, not in any way bearish on Bitcoin. If you see here, we are still levels ahead of this 10-week EMA. So, you know, no issues there. So yeah, a really quick video. There's also another cool thing that I created. It's on my Twitter. So here you go. Came up with this really cool scan. Could be a potential day trade retail sentiment scan. So the criteria on finviz.com is stocks under $2. So this was a down day that we had on February 25th. And what I'll do is I'll say the positive change from open, and then the positive for the day, like the positive percent change for the day. And that day, it so happened to be 98% bearish. So markets have not been the same really since that day. I did it today. And we have Stonk Sentiment Scan. 13 out of 216 stocks had a positive percent change for the day. And 15 out of 216 stocks had a positive change from the open. That only gets us 94% bearish, guys. 94% blood out there in the streets. Just, you know, hold what you have conviction in. Have your cash ready to buy more dips. And yeah. No financial advice though. No financial advice though. Ain't nothing to it though. Ain't nothing to it. Quick video since I came back. So hopefully y'all enjoy. Y'all learn something. And the key right here is making sure you look at this Aussie dollar to give you that indication of how we're gonna do in those stocks. Breaks below yesterday lows, big bearish candles, below short-term EMAs. I mean, those just give you those signs like we're just not there yet, you know. We're not there yet. Thank y'all for tuning in. Really appreciate y'all for showing support. Broke 200, y'all. Come on, broke 200 subscribers. So let's just keep climbing. Let's just keep climbing and be patient, y'all. Please, man, be patient. All right, y'all. Peace.